Now we have the best of German investing. Rainer, Maerkle. We know each other for a long time, even from my Lehman time, I believe.
Yes, pleasure.
Now, tell us a little bit. I mean, you used to be indirectly kind of part of Holtzbrinck.
Yes.
A lot of things changed since then. Give us an update where you guys stand in your kind of cycle and what's up in your world.
Sure. So our firm originated 15 years ago, actually, as you know, a subsidiary of a German publishing group, Holtzbrinck, under which we invested for 10 years before we spun out of this group in 2010. Since then, raised 3 large funds, 177 million, 175, and the latest one now in January with 285 million, which we only invest in consumer internet companies, mainly B2C, some B2B2C, centered around Europe, especially Germany, but we invest on a global basis. And what really changed over the time, we've always invested in the sector, so I think we're one of the most active investors in the sector ever since. Now with the bigger fund sizes, what we try to do is follow on
How
in the investment.
How big is your fund now?
The current one is 285 that we are actively investing for new investments. Yeah. And with this one, we are trying to allocate more money in the winners in our portfolio along the lifetime, but our general strategy hasn't changed. We like to go in early as one of the first institutional investors.
What's your smallest check size you would write?
About 500K is
Really?
the smallest. Yeah. Our sweet spot is anywhere first rounds 500K to 2 million. That's what we like, extremely early.
And then you follow.
And then we follow in the ones that make it to this chart.
Which one of those you are most excited about?
I mean, obviously, we are very proud of the exited companies, of course. Now we are excited about all the returns that we generated there. We're still a shareholder in Zalando.
Can you speak about the returns a little bit? Like in your industry, that's how you measure success. Right?
Yes, absolutely. If you talk to Vintage, they're one of our investors. Maybe they are disclosing it. So we have very strong returns, more than 30% IRR. So very strong due to the great achievements of our founders. And clearly the companies that we're still involved with, Zalando, an investment that we did together with Rocket back in 2008. We are still a shareholder all the way through IPO. Of course, we're very proud. We think it's incredible what those guys achieve. But all other companies you see here, we are equally proud of.
So you think, I mean, your business is doing well, you're raising funds, etc., but the funds in the US are much bigger.
Yeah.
Could you raise $1 billion fund?
Yeah, we could actually, and we were. Our last fund was heavily oversubscribed, and we tried to somehow allocate the capital. But the thing is, actually, first of all, of course, our investors don't like it, but we don't like it either, because with our position,
too much work,
too much money. I think what our position is just we like to be in very early. And if the fund gets bigger and bigger, if you have a billion fund, then it just doesn't work to do 500K, 1 million first investments, and you think, well, is it really worth? I'm better waiting for the next round when you lose the opportunity to work with the greatest companies from the start. So for us, I think then the strategy would rather be setting up a separate fund, what others do. But for now, we are very happy with what we have.
So listening to that, there's enough capital.
Yeah.
So where do we lack? What is the problem of the system in Europe versus the US? Do we have a lack of investment opportunities, or do we have a lack of investment professionals?
I think actually, my view is that we don't really have a major problem here. I think the only problem...
You don't have a major problem.
I think the system doesn't have a major problem aside, but one that I think, my view is that and this is actually more your job, that the M&A markets don't keep up with the pace what's being built underneath. So the biggest concern I would have, that if you see the unicorn charts of Vintage and all the others, we are creating companies, and basically you guys are creating, or the entrepreneurs are creating great companies, and many of those, at least in terms of valuations, are shooting towards levels that are just not being paid by European M&A. And I think that's one major challenge. This whole system that we are all fueling and building, what's the output of this? They're not going all IPO, and so there must be a healthy M&A market. or companies remain private for a much longer time and maybe remain in the private sector forever. And I think this is an issue that we will only see over the next couple of years, which will then feed back through the whole system and impact all the way through to early stage. So very exciting times.
Let's talk a bit about the value you add to a company. I mean, there's capital.
Yes.
Which, you know, people feel safe when they raise some money and they actually can spend it and they can follow their vision. But what else comes with it when your fund is investing? What do you add to the story?
So we are, we are a financial investor, and we like to be very honest with our entrepreneurs. It's not something, we don't have infrastructure. We are 9 investment professionals in the fund, and all that entrepreneurs get is our involvement. So there's no operational deep involvement. There is no infrastructure. We are the guys taking or coaching entrepreneurs to the right directions. We're raising capital for our companies. We're helping them in all the governance, financial systems, option programs, etc. So basically, we do all the homework together with the entrepreneurs, so they can focus on.
WeWork takes the pain out of the office administration. You take care of like things you have seen before and you know well.
I think
that's incentivize.
That's the basic proposition that we need to deliver, and we need to deliver the homework. And our focus is, we focus on this with a very, very diligent approach. So I think we are the fastest VC out there. We are very fast in taking decisions.
How
very
fast
pragmatic.
are you from business plan to invested capital, wiring the money?
So the fastest was closed. The fastest decision can be taken within 24 hours. It's not every decision is like this, but we can take it. And all the way from, I think, from getting to know the company until signing of the contract, I think the record is even within 10 or 14 days. So we can be fast. It's not always the case, but also in the day-to-day.
How were the fast ones? How did they play out?
Very, very well, actually. So obviously those are the guys that we know before, have some relations before, and we like to work with, but turned out to be good decisions.
So let's put ourselves in the shoes of an entrepreneur.
Yeah.
You want to raise some money. You have the Silicon Valley guys, and they even did TV shows about Silicon Valley.
Yes.
Like, highly entertaining if you haven't seen them yet. Out of the entrepreneur's shoes, raising money from kind of a German, originally from a media group, VC versus a US one. What do you hear from the companies you deal with, having a US investor like a Sequoia, a Kleiner, versus a European fund? Often they want to have access to the US. Do you think that matters?
I think for an entrepreneur, the major decision is, do you want to have a big brand name in your company, on your company side, or do you want to have a partner which you work together with on a daily basis? We are with our entrepreneurs, we're normally in contact on a daily basis. We are always there, we are very reactive, and as a US VC, you just cannot live up to this promise. So that's, I think, a different approach. And then, obviously, with our portfolio, with the funds that we manage, we have stronger and stronger access to the US. So we take regular trips to Silicon Valley, New York, and build up our investor contacts. So I think we are getting closer and closer, but obviously many entrepreneurs, if they see the Sequoia or Union Square brand name, they just jump on their boat, which is totally fine.
And the US guys, I mean, there's obviously terms, there's kind of chemistry between the investors and the entrepreneurs, but then there's kind of the topic, which is the bad truth, valuation. Do the US guys are kind of spoiled from their US experiences where companies do achieve sometimes mind-blowing valuations? Do they come to Europe and go bargain hunting, and is it difficult for you mentally to compete with these guys on valuation levels?
I think it's actually something that we're seeing to start. So I think it's fair to say this is the first time in our 15-year history that we passed on a whole series of interesting deals on our home turf just due to terms. Normally we could always get to terms with entrepreneurs, but some now really seek spoiled valuations, which is something that we don't do. So if we don't see the right terms, then we just don't do the deal. And this is really, I think, something that's just happening now, that some teams are just able to raise capital at valuations that, from our point of view, at this stage doesn't make sense, and which is an effect of more capital and some names coming over and just throwing money after teams with less work, and as they just want to be involved with those teams. So
maybe last question, because lots of people probably want to ask you the question. What are you looking for when you are evaluating investment opportunities? What kind of segments, the team, the age, the size, the KPIs? What is like your sweet spot deal?
So it's consumer internet sector, and then we are very much focused on the right product and approach. We don't put team first. Of course, we need to like the team, but we think even a strong team with a bad idea won't make it. So we're very much focused on the right idea in our sector, and then focus on working with the entrepreneurs and help them increase the team, maybe even more.
Don't talk to us what you do.
No, that's what we're looking for. So we're looking for huge markets, huge opportunity, big markets, huge opportunities, great product, well, vision of a great product.
How long does the track record need to be?
0.
Because you're doing smaller checks.
And we like to work with first-time entrepreneurs.
You do like to work?
Yes, absolutely. Actually, our better experiences are often with the first-time entrepreneurs. Look at the Zalando team, first-time entrepreneurs, and many of our portfolio, we like those guys actually. We like to work with young, hungry, ambitious people, and we can always bring skills into the company by senior recruits that we don't put in a management team, but just help the management team, which is driving all the data-driven culture and ambition into the company. We actually value this higher. So first-time teams, come see us.
Rainer, thank you for being so loyal. I think Martin Weber came to the first NOAH conference in 2009, I remember.
And we'll be here next year, for sure.
Thank you for being here.
Thanks.